Why governments want you to keep your money in the bank. Imagine waking up tomorrow morning. You open your banking app and your balance says zero. Not because someone hacked your account, not because you spent it, but because everyone else decided to take their money out at the same time. Sounds impossible? It has happened before. Entire banks have collapsed because people suddenly wanted their own money back. Which leads to a strange question. If it's your money, why does the government care so much about?
People hid money under mattresses, inside cupboards, even buried it underground. Then governments and banks slowly changed our habits. Salaries started going directly into bank accounts. Bills became digital. Taxes became easier to collect electronically. Cash started disappearing from everyday life. Today, in many countries, you can survive for weeks without touching physical money. This looks like convenience, but beneath that convenience is a powerful economic machine. Instead, it lends a large portion of that money to someone buying a house. The seller of the house deposits that money back into the same bank. Then the bank lends part of that money again and again. One person's savings become another person's loan. That loan becomes someone else's deposit. The same money starts moving through the economy over and over. This process creates credit, and modern economies run on credit. Businesses use loans to expand. Families use loans to buy homes. Companies use loans to hire.
If every customer of a large bank walked in tomorrow and demanded cash, the bank couldn't pay everyone immediately. That sounds scary, but it's not considered a flaw. It's literally how the system is designed. Banks assume that most people won't withdraw all their money at the same time, and usually they're right. The entire system runs on confidence. Confidence that your money will be there tomorrow. Confidence that everyone else won't panic. Confidence that the machine keeps moving. The moment confidence disappears, problems begin. In 2008, banks around the world.
Why central banks act as lenders of last resort. Why officials repeatedly tell people that the banking system is safe. They're protecting something much bigger than individual banks. They're protecting confidence itself. Because confidence is the invisible infrastructure of modern money. Here's the irony. Most people think money is the foundation of the economy. In reality, trust is. Without trust, paper money is just paper. Digital balances are just numbers on a screen, and banks are just buildings. This is one reason why some economists worry about a future where everyone hoards cash or shifts large amounts of wealth outside the banking system. The system becomes harder to manage. Monetary policy becomes less effective. Economic growth can weaken. This is also why many countries are becoming increasingly digital. Digital payments leave trails. They're easier to track. Taxes become easier to collect. Financial crimes become harder to hide. And money remains deeply connected to the banking network. Again, convenience and control often grow together. None of this means banks are evil or that governments secretly want to steal your savings. What happens in a future where people no longer trust institutions at all? That's not just a banking question. That's a question about the future of